Welcome to Kitco News. I'm Niels Christensen. Joining us to talk about the Federal Reserve and its impact on gold prices is Peter Grosskopf, CEO of Sprott Inc. Thank you very much for joining us today, Peter.
Oh, thanks, Niels, for having me.
So the Fed will announce their monetary policy today. You had a report come out on Tuesday talking about, the Fed's balance sheet maybe ballooning to $11 trillion. It's at 6.6, I do believe, at a record high. Does the Fed have anything left?
That's a very good question. I think they're mostly out of ammunition, but there are a few things that we would expect them to focus on at the meeting. The first is that they will reiterate their commitment to open-ended QE to infinity. We will do whatever it takes, etc. So just a recommitment to that, and they will probably extend the timelines of their low rate policies. So just reassuring everybody that they will be there. The second thing, which is also likely that they will do, is raise the caps on the lending program that they have initiated a month ago, because they're already blown through their targets in terms of the requests from that program, and I think they want to tell people that they will be there to keep those programs going. What we do not expect at tomorrow's meeting is that they will go to negative rate policy, and we also do not expect that they will yet start to announce a kind of a yield curve target program, which will probably present itself later this year. We do think the Fed's in a position of being the subject of last support of the treasury market, and that they will have to tie their fortunes and the fortunes of the treasury market to their continued support. So by later this year, we expect them to be targeting yield curve amounts.
Wow. So just more capital flooding into markets and just in different ways. Did negative interest rates even matter at this point? I mean, they have so much, the alphabet soup of monetary policy right now. Do rates even matter in this world?
We don't think they matter that much to the real economy. I think this is all somewhat of a management game where the amount of debt is just so large that the Fed needs to continue to massage that equation so that it can merely be maintained. So whether or not they target small positive yields going forward, the important subject in the market, the important theme is financial repression. They want to encourage inflation while having real rates remain negative.
What does this do for gold? We're seeing a lot of calls for gold to hit all-time highs by the end of this year. Is that realistic? What do you think this does for gold?
I do think that the current environment is more supportive for gold, and that the gold thesis has been accelerated by the crisis, whereas it has always been a fringe asset while fiat currencies were decoupled from gold since 1971. Gold was traded by inflation bugs, gold bugs. It was traded by hedge funds, but it wasn't an asset in the financial mainstream. And I think what's changed now is that absolutely more people are looking at this as being a mandatory insurance policy to what they hold in fiat currencies and other assets. And so the proportion of the investor base that is starting to participate in gold is now much larger. And we think that means inflows for a long time in a very supportive environment, higher gold prices. Yes, we do think they will hit records coming into late this year. If you look at the technical charts, what's really interesting is they're all very supportive of gold being in an uptrend. Open market interest has not been rising to the same degree that it has in the past on gold surges. As I said before, the gold forwards price is starting, the close month in is starting to lead the physical higher. This is all symptomatic of large inflows into physical gold.
Well, and now what about, the argument paper versus physical? I mean, there are instruments out there that lets you have physical without having to worry about actually, storing the bullion. Is this going to be the new normal for the gold market?
For those parties that prefer paper, either because of the leverage or because of the ease of trading or because of the ease of storage or the lack of needing to be able to store gold, we understand those are attractive markets, but the users of those are going to be a lot more discerning. And by many counts, those markets might outweigh physical by anywhere between 10 to 1 to 100 to 1. So eventually the scrutiny on the paper markets is going to force more holders to prefer physical.
What's supply crunch look like for you then? I mean, obviously we see refiners and mints reduce capacity. Is there enough physical to meet this investment demand?
I think that the physical market is going to slowly be squeezed higher. That what is in particular the issue is that should a certain percentage of investors, let's say 10% or 15%, decide to hold 3 to 5% physical gold in their portfolios, then there really isn't enough physical around. And then you'll get a large squeeze on both the gold price and the search for physical.
In this environment where we see, negative yields, massive money printing, do you think that 3 to 5% allocation still holds? I mean, should be people looking at more allocation, less allocation? What's the magic number? What's the sweet spot for an investor?
I think that whether you're a professional investor or whether you're a household, based on what's actually happening in the world right now with the amount of debt, the credit stress, and the amount of fiat currency printing, you are actually being you're being not safe by not having 5% of your household wealth in gold at this time. If you wanted to be more aggressive, I think 10%, including some equities, is probably a better hedge for what's happening. But I think you're imprudent if you don't have some precious metals in your portfolio now.
Excellent, Peter. Thank you very much for those comments. This has been a fantastic conversation. Thank you very much for joining us today.
Thank you for having me on.
Thank you for watching Kitco News. For the latest information in the precious metals markets, go to kitco.com. Stay safe and stay healthy.